Good evening. Thank you very much, ladies and gentlemen, for attending this Shares event. And I'd like to thank Shares for all the organisation behind the scenes and during the evening. Ariana Resources, a gold exploration and development company operating primarily in Turkey. This photograph shows our very first gold and silver pour. That's the very first doré ingot that we produced in March of this year. The usual disclaimer, we've already dealt with that. Moving on to an overview of the company. We're an AIM-listed exploration development company. We've been operating in Turkey, primarily in Western Turkey, across a number of projects for the last 12 years. We listed on AIM in July 2005. Highly experienced management team. Joining me today is Michael de Villiers, our Executive Chairman. And I'll go on to talk about the rest of the board in future slides. We've got one producing asset within a 20-year renewable license that was last renewed in 2014. So we have good tenure. And we've also got significant exploration upside, both at that project and the related and broader Red Rabbit project, as we call it, and also in northeastern Turkey at our Salınbaş ex-joint venture project with Dorado, which we now hold 100% of. So our main producing asset sits within what we refer to as Red Rabbit. It's 50% held with a Turkish construction firm that's called Prosea. Within that, we also have a development project called Tavşan that contains a resource of a further 215,000 ounces gold equivalent. Key data on the company, major shareholders there, and also current market cap, just about £16 million. So we've seen our market cap rising, obviously, in the run-up to first gold pour, and also as we've completed the acquisition of the Salınbaş project and also developed other aspects of the company over the last year in particular. So this is the board. Michael and I have been involved since the AIM float, and indeed prior to that. William Payne, our CFO and also non-exec director, partner in Wilkins Kennedy, a top 20 UK accounting firm. Lots of experience there in the audit accounting function. Chris Sangster joined the board more recently. He's a mining engineer by profession. He's got extensive experience in various operating environments, primarily in Africa, but across the full range of open pit and underground mining projects. And really he provides the oversight that we need now that we've moved into joint venture production at Red Rabbit. So why are we in Turkey? Well, it's a prolific mineralized district, part of the Tethyan Eurasian metallogenic belt that's host to some of the world's largest copper and gold deposits. There are a large number of operating mines in the country today. We've seen gold production increase dramatically since 2001. We've actually seen a number of changes to the Turkish mining law over that period of time that's encouraged mining activity broadly, but gold mining in particular. So we've seen that full range of gold mines come on stream. Some of them are world-class. The Dorado mine at Kışladağ is Europe's largest gold mine. We're expecting gold production in Turkey to increase again. As you can see, it's tailed off a little bit since 2013 with a drop in the gold price, but we see that coming back and strengthening, and indeed some of the new projects that we'll see coming on stream will only add to that. So it's a very good jurisdiction to operate in. This is a photograph of the Kızıltepe mine at Red Rabbit. I've got a little video to show after this, but I'll quickly talk you through the infrastructure that helps understand the video somewhat better. Over here is the primary crushers, so primary and conical crushers, into the screens building here, and then from there into the fine ore stockpile, and then off into the ball mill, and from the ball mill goes into a slurry out to this building behind it, which is the carbon in column and carbon in leach processing circuit. So it's a conventional cyanidation route for the recovery of gold and silver. So this video will give a feel for the construction process that we've been through during essentially the last year or so, through some difficult weather conditions at the end of 2015. Site preparation there, you can see up on the hill, the mine depot, the white building in front, and just behind that the mine laboratory building. And then from a different angle, showing the construction of those buildings that I showed in the previous photograph. The open pit will be developed just in front of that, effectively. So our partners, Presea, are a major Turkish construction firm with a specialisation in gold and silver processing plant, EPCM. So this is obviously something that they've done before, and as you can see, has been done very professionally indeed. And we're now moving into the ramp-up stage of the operation, and that is going smoothly. So this is towards the end of this last year. Again, some bad weather conditions experienced to the point that we had some last-minute delays on the development of our tailings dam, but we're over that now, and now pouring gold and silver. So this is a summary of the Red Rabbit partnership. Presea have completed their earn-in to 50% of the joint venture on expenditure of $8 million. They are managers of our joint venture, very capable managers indeed. They are continuing project funding during the ramp-up stage. Obviously, with any new mine development, there's working capital requirements, so they're continuing to fund that. With no change to the joint venture equity, that will stick at 50-50. Presea also separately funded, and this is beyond the requirements of the original joint venture agreement, they separately funded the remaining landhold acquisitions that we required to set up the project infrastructure. On our side, and I think this is why the partnership works so well, we've provided additional capital to go on and do further drilling and exploration work in and around the Kızıltepe vein system, and effectively enhancing the project yet further. That's gone in on a loan basis into the joint venture company, and as we've gone into production, that will start to be repaid. The project build was funded primarily through a $33 million finance facility from a Turkish bank, Türkiye Finans Bankası. They are essentially developed out of the Islamic banking model, so there's no headline interest on that, but effectively it works out at 7.5% per annum over a 5-year term. Should just point out this photograph here. This is not of the Kızıltepe mine. This is actually Europe's largest gold mine, Kışladağ. This is the ADR part of the circuit at Kışladağ, which is a heap leach, but this was designed and built by the Presea team. So you can see the capability among that team. So just quickly running through some of those points, in particular the production ramp-up that we're in currently, that will be completed really by June. We'll be providing a further update to market in June relating to the production during that first quarter and reporting on a quarterly basis thereafter. But so far so good. We have experienced some encouraging results from the initial mining operation. So just running through the project economics at Kızıltepe, this is the results of the definitive feasibility study that we completed with Tetra Tech back in 2013, and is essentially provided the design parameters for the operation. Mine life was 8 years. We've already demonstrated from the latest resource development work that we'll take that to 10 pretty comfortably. And if we start considering some of the satellite sites, the satellite prospects, we could perhaps take that to an 11.5 years. So this is currently not yet factored into our economic model. So that's just upside. Also, the processing capacity is another point that's worth dwelling on. Design rate of 150,000 tonnes per annum. We're going to be increasing that to possibly 180,000 tonnes per annum, even during this ramp-up stage. And that's partly down to process and operational efficiencies, mine scheduling, but also an additional capacity that was built into the plant. Tailings storage facility, so this is a conventional wet tailings storage type situation of 15 years. We can basically produce gold at that throughput rate for 15 years before we have to start considering alternative sites for tailings or increasing the capacity of the existing tailings. Key project economics shown over there, showing very healthy returns, and some detail provided there on the construction debt. We are already paying that debt off and have been since December 2014. Importantly, the loan terms, they're non-recourse, so they are at the joint venture company level. No recourse to Ariana and Berger directly. Secured against the operating assets and indeed the shares, our shares and their shares in that operating company, and also freehold land. There is the sensitivity analysis that we have published previously, showing the base case at about $1,300 per ounce of gold, NPV8 of 34, and most importantly, the cash cost. That's really what I want to draw your attention to. This is a high margin mining opportunity with gold price currently at about 1,270 or just shy of that. There's a very healthy margin there. You can see that gold, the cash cost varies across the model range based on the gold price because there are also royalties attached to this. But that cash cost is inclusive of all on-site and off-site charges plus those royalties. So that's a state right payable to the Turkish government plus a 2.5% net smelter return to Franco-Nevada. Another important development at the project was securing strategic investment status through the Turkish Ministry of Economy. We secured that a couple of years ago. That, interestingly, it's brought down the corporate tax rate from 20% to 2% in the early years of the operation. So that's essentially during that payback period, that 2.5 years or so. There are also a number of other incentives that are built into that, including the Turkish government paying the social insurance contributions of all mine employees for 7 years of mine life. So that's essentially most of the current designed mine life. There are other incentives that we've taken advantage of already, the customs duty exemption when we're bringing kit in from overseas, and VAT exemptions. So both exemptions and indeed VAT rebates. We've probably got a couple of million in VAT rebates that are due to be paid back to the joint venture entity at this time. The Turkish lira gold price is also at historically high levels. There's obviously been a devaluation in the Turkish lira over the last few years. But when you're paying your laborers and most operating costs are denominated in Turkish lira, but the item that you're selling is dollar denominated and sold through the Istanbul gold refinery, that it also helps. So this is a satellite image of the primary infrastructure at Kızıltepe. The initial pit will be developed here at Arzu South. The process plant that we saw in the video is just there. This is the waste rock dump, and that's the tailings storage facility that I spoke about. Once we've mined Arzu South for about 5 years, we'll then be sequentially mining Arzu North Pit, Derya Pit, and Banu. From some of the most recent exploration work that we've undertaken, we've drilled through this area. We long believed that there was an extension of the vein system under a sequence of cover rocks. The cover rocks can vary between tens of meters to 100 meters or so in depth. So it was quite a difficult technical drilling target, but we were able to intercept that in the latest drilling program that we completed at the end of last year. And we've added another 650 meters onto vein strike undercover. And indeed, the vein system becomes a lot more complex as we go undercover. And as you can see, there is this sort of splaying effect of the vein system as it goes higher into the system. So there's plenty of scope to continue growing this resource and ultimately adding to mine life. That is the case there at Kızıltepe itself. So now we're looking at all the joint venture licenses, which are these ones, as well as a couple of licenses over here that are held still 100% by Ariana within a broad corridor of mineralization that we refer to as the Sındırgı Gold Corridor. So while we've got plenty of exploration upside at Kızıltepe itself, we've also got upside here elsewhere within the joint venture licenses at all of these individual prospects, the Kepez prospects and Karakavak. We've drilled some of these with positive results. We're expecting to be able to establish resources on these in due course, and ultimately these are all within trucking distance down to the Kızıltepe processing plant. So either we're going to grow the existing resource from 8 to 10 years, and we're already demonstrating that, or we're going to be adding additional ounces from some of these satellites. One of the satellites that's particularly interesting, given we've got 33,000 ounces currently sitting in an inferred indicated resource, is Kızılçukur. So this is 100% held by Ariana. We have the right to sell this project into the joint venture at 3 times exploration cost. And that's dealt with down here. We've undertaken Whittle pit optimization. That's essentially a technique used to determine what you can extract economically given certain parameters. And we've identified the potential to establish 3 open pits there at Kızılçukur with ore that's truckable down to Kızıltepe. There's more work that we need to undertake on this, metallurgical test work, to demonstrate that the ore is amenable to the cyanidation route that we have at Kızıltepe. But so far, so good. The results have been positive. This could either replace ounces that are due to be mined at Kızıltepe or add to mine life. So there's a lot of flexibility that we're building into our development program for the Red Rabbit joint venture. I think in all likelihood we'll end up adding these ounces to the Kızıltepe operation, which could extend that mine life by about another 18 months based on the current resource. Just quickly on this one, which emphasizes a point I made in a previous slide. This grey panel here, looking at the 3D model of the vein system at Kızıltepe. The vein is shown in yellow. The grey panel here is the zone undercover that we've now drill tested. So you can see from the designed pits, which are shown in blue, so these are the pits that we're currently working to. These are the engineered pits. We've already demonstrated that there is the potential to grow those pits quite substantially. This is the Whittle pit optimization last undertaken on the most recent resource. So we're already demonstrating that we can capture more mineralization. I think in all likelihood we'll continue to demonstrate that with the latest resource work. We're actually working on a new resource update at this point in time, so we hope to be able to say some more on that in due course. So now looking at the Red Rabbit Gold Project area in a broader sense, looking at a geological cross-section, which is a regional cross-section running from the southwest now to the northeast. These prospects effectively sit within the Kızıltepe sector, which includes Kızıltepe, of course, Kepez, Karakavak, as well as these 2 that are still 100% held by Ariana, and Kızılçukur that can be sold into the joint venture at 3 times exploration cost. Tavşan up in the northeast, it's already got 215,000 ounces on it in inferred and indicated JORC resource. We've already demonstrated there's the potential to grow that resource based on an assessment of the exploration geochemistry, trenching that we've undertaken, and an assessment of historical drilling. We believe there's potential to grow that by another 100,000 ounces. So there's plenty of scope to grow the overall resource within the broader Red Rabbit joint venture. Looking at Tavşan specifically, this is the scoping study summary. We've demonstrated that the ore is amenable to heap leaching. We could mine it for 4 years, but there's scope, as I said, to grow that and ultimately add to mine life. Some very healthy project returns from the existing resource with a very fast payback. Quickly run through that. That's the exploration assessment that we did recently. The geometry of the ore body is very amenable to low strip ratio open pit mining, so low risk mining. It's a flat-lying ore body. The open pits will be very shallow, 10 to at most 20 meters deep. This is the resource development schedule for the Red Rabbit joint venture, mining at Kızıltepe at a rate of about 20,000 ounces per annum. But ultimately, we want to bring Tavşan on stream, mining at a rate of 30,000 ounces additional to Kızıltepe. So ultimately, by about 2020, we believe we'll be mining at 50,000 ounces per annum. Quickly on Salınbaş, this is up in northeastern Turkey. So this was the joint venture with European Goldfields. And after that with Eldorado Gold. We acquired it from Eldorado Gold just at the end of last year, bought out their 51% stake in that in exchange for a 2% NSR. The joint venture, both European Goldfields as well as Eldorado Gold, spent $9 million on that project. So a significant investment. We identified a 1 million ounce resource here at Salınbaş related to the Ardlı copper gold porphyry. We completed a scoping study on that, again demonstrating very healthy project economics. Why is Salınbaş important? Well, it sits within what's referred to as the hot gold corridor. Hot Maden is in the news again today, interestingly. Hot Maden is a 4 million ounce discovery made a couple of years ago and is continuing to grow. But this trend of mineralization is highly significant. And as you can see, we've got the licenses over most of that trend. The distance between Salınbaş and Hot Maden is 15 kilometers. There's a large part of that trend that has not even been explored yet previously in the joint venture. We're actually working on a plan now to start up exploration right through this corridor to target some existing known prospects such as Hızarlı Yayla and Derinköy North, but also to close off this gap in geochemistry and this gap in geophysical understanding of the geology. Ultimately, we want to define new drill targets, but having said that, we've got plenty of drill targets currently as numbered there on that slide. So just in summary, Ariana represents exposure to near-term, low-cost gold production in Turkey and also additional exploration upside across multiple projects, but particularly at Salınbaş, which is demonstrating multi-million ounce potential. We started gold production. We're in the ramp-up phase of that production. We'll be reporting quarterly hereafter, but in addition to that, we're continuing our exploration at Red Rabbit, and we'll be developing Tavşan in the months and years ahead. In summary, the takeaway that I'd like you to keep in mind is our historical cost of discovery at $15 per ounce compares very well indeed with the average cost of discovery of an ounce globally, which is running at about $40. And ultimately, it's that difference that is the key difference defining a successful exploration company from one that is not. Thank you.
Any questions, anybody? I'll start off. Oh, here we go. Two here.
Good evening, Kerim.
Hi, Paul.
In June 2015, you implied that the Eldorado joint venture project was approximately worth $30 million US. Mm-hmm. I just wondered why Eldorado gave that up for a 2% net smelter royalty.
Yeah, so that valuation was based on an assessment of the project sale value, so on commercial terms to other companies in Turkey or to foreign companies entering Turkey. And there was a valuation of about $54 US per resource ounce. So extrapolating that across the Salınbaş resource, we could reach those sort of figures. In terms of Eldorado's strategy, obviously they're focused on their two producing assets in Turkey, Kışladağ and FM Çukuru. They had a large expansion program at Kışladağ with an associated exploration program. They wanted to focus their exploration very much on those two assets, is our understanding. And in fact, they'd cut back on exploration in a global sense. And they were already, they're in Greece, in Romania, Turkey, and previously China. So they were quite spread. And they ended up in the joint venture because they bought European Goldfields. So our original JV, of course, was with European Goldfields. So I think it wasn't immediately El Dorado size. You know, for El Dorado to really be interested, it would have to be 2 million ounces from the outset. And they were obviously just more interested in continuing to focus their attentions on their producing assets.
Thank you.
A question just behind, I think, wasn't it? Just behind you. Thank you. Thanks.
Thank you. My question would be again about Salambas and the amount of money which needs to be spent on exploration and all you need to do in the next 5 years.
Sure.
How do you see that money? Where is it going to come from? Joint venture, dilution?
Yeah, I mean, there are multiple pathways that an exploration company can take to develop its assets. What was important for us was to take control of the joint venture, be that in a management sense or, as it turned out, to acquire El Dorado's stake. Now that we have the project in its entirety, it leaves a number of options open. We're not averse to just selling the project if there's a suitable buyer, and there's certainly interest, given the interest in the Artvin district. It's a very prolific exploration district in Turkey, perhaps one of the most significant right now because of the discovery of hot maden, but other mines such as Ceratepe, which is due to come on stream. So that's one possibility. Another is to joint venture it, and you know, there are options to do that. The alternative is to fund it ourselves, and if we fund it ourselves, you know, how do we do that? Well, obviously we have a producing asset. In time, that will help fund some exploration, but you know, equity is always a possibility as well.
And the news about hot maden today, did that change your thinking about Salambas and maybe the...
No, it reinforced it. I mean, we've always, I mean, going back to 2007 when we first picked up the licenses that have now become the Salambas project, we strongly believed that there was serious potential in that area. We knew that at that time that it was going to be a step too far for Ariana to develop it in its own right. So that's why we ended up in a joint venture with European Goldfields. So that funding from both European Goldfields and latterly from El Dorado Gold has brought us to this particular point without, you know, a single dollar being spent by us. So to go from a green grassroots exploration project, which it was back in 2007, to some years later with 1 million ounces in the ground in a district that is clearly multi-million ounce potential, I think we're in the best possible place.
Any other questions, anybody? I've got two. Obviously, you're now going to production phase. As you ramp up production, when will your cash flow turn positive as a business? Have you got sort of projections for that?
So I went through that fairly quickly in the presentation, but you saw the payback periods over that model range. So 2.5 years or so, depending on what the gold price is doing, it is the payback period. Cash flow positive from that point onwards. I mean, obviously we're repaying that debt of $33 million to Türkiye Finans Bankası, and you know, not to say that we're not looking at other things and looking to enhance mine life, to improve those project economics.
With your satellite operations, you mentioned that you can extend the mine life of where the processing plant is. Could you not bring the material down and increase the production capacity?
Well, that's right. I mean, there's got a lot of flexibility in the mine schedule potentially, both within Kızıltepe itself, but if we start considering some of those satellites, that's absolutely right.
Which would be cheaper to invest in bigger capacity there, wouldn't it?
Yes, exactly.
Thank you. Any other questions, anybody? Gentleman here.
Forgive me, I can't remember the name, but thank you for being up front. I'm in a property world, so in a property world, the closer you get to the end of your term of the lease, the figures change in terms of, is it worthwhile still being an investment? Don't know much about your company, But I'm thinking, if you've got towards the last third of your lease, is investing in your company now only linked to this particular, let's call it field, or is there a roll-on effect to other fields?
Yeah, if I understand what you're getting at, it's exposure. Exposure to Ariana is giving you a couple of things. I mean, it's exposure to Turkey, exposure to gold in particular, being the primary economic driver in a production sense. We have multiple assets. We have highly de-risked assets, so that's our producing mine. And then we've got riskier assets that are potentially, in the longer term, much more valuable than our producing assets. So Sullenbush is the example of that. Being a relatively early stage exploration opportunity with multi-million ounce potential. So there's a range of risk in there. And an exploration company, like a biotech company, in fact, has to deal with a range of risk. And you have to have a pipeline of project opportunities, from the highest risk ones all the way through to the lowest risk ones, if you're going to succeed in the long term.
So will you be going on to, you know, the, I don't know what the jargon is, but let's say the patch of land next door, let's say 5 years from now, you agree the license for that. Is there a snowball effect?
Oh yeah, exactly. You can. So this is one of the interesting things about mineral deposits. They nucleate. They occur in clusters. So once you've found one mine, good chance is that if you drill next door, I'm putting it really simply, if you drill next door, you'll probably find another. So it makes sense to look at fields, effectively. So not single assets, is to look at the broader geological province in which you're located, and to understand and pull apart your understanding of that geology so that you can target for new exploration.
Thank you very much indeed. Thank you, Kerim. Thank you.
Thank you.